Hi everybody, this is Steve Baird, the founder of the Baird Group at Scotia McLeod. And today I'm happy to have with me Aubrey Basdeo from Blackrock, which is the parent company for iShares. And today what we're going to do is just chat a little bit about using iShares ETFs, exchange traded funds, for your fixed income exposure for your portfolio. And Aubrey is the Aubrey. Maybe tell us a little bit about what you do for iShares.
Absolutely, Steve. Thank you. I am the head of the Canadian fixed income business for Blackrock, and that straddles both the institutional side of the business and the retail side of the business.
Great. Great. So Aubrey writes a fair bit about strategy pertaining to Canadian fixed income, and as we know, with interest rates at rock bottom levels these days and remaining steady there, we're always looking for new ways to drive return for our fixed income clients. Aubrey, for folks that are new to using exchange traded funds for their fixed income exposure, for some people this is a little bit of a departure from their past work. Maybe tell us a little bit about your concepts and your ideas around using exchange traded funds for fixed income.
So the ETF or exchange traded funds were designed and developed to address certain issues for accessibility to the marketplace. We view the value proposition for ETFs as providing liquidity, transparency, diversification, and I can't help but overemphasize this, the cost of accessing markets. By liquidity, what we mean is that you can get access to the market because these trade on the exchange like a stock. Mm-hmm. Transparency, you can see the price. It's always been quoted, whereas for a particular bond in the fixed income market, it's an over-the-counter transaction, meaning you have to call the dealer. There are no posted prices on an exchange. Mm-hmm. And so you're never sure where the market is. And when you call one dealer, you're not seeing competing prices. You have to keep calling a number of people in order to get competing bids. On an exchange, you just look at the price on an exchange, and that's where everyone is accessing that. Mm-hmm. Diversification is very important when you're owning an ETF that's providing you with access to a broad market as opposed to an individual stock or bond. And so that's a huge benefit when you're looking to get access to a market. Mm-hmm. And then finally, I mentioned the cost. The traditional way in which you would access the market for most retail investors would be via a mutual fund, and the cost of which is fairly significant in Canada. ETFs are able, via the ETF market, it's essentially like a mutual fund, and as I said, it trades on the exchange, but it's provided at a significantly lower cost than your traditional mutual funds.
Right. And from my perspective as essentially a person who looks at the strength of various different pockets of the fixed income market, what I really like about it is that I can track the progress for various different exchange traded funds, whereas when you're looking at individual bonds, it's very difficult to track their progress.
Right, and if you own say the Toronto the index, for example, the TSX 60, you know what the performance of that is. That's quoted in the papers. You can look it up and see how your portfolio of stocks are doing relative to the broad market. Mm-hmm. Whereas particularly in fixed income, most investors are not aware of what that index is. Via the ETF, because we track an index with the ETF, you can look on our website what the performance of that relative to that index is. So you know how you're doing relative to the broad market that you're trying to access. With an individual bond, for example, you wouldn't know if you're tracking to the specific index that you're looking at, unless you were to be able to access that as well.
Great, great. So let's leave it at that for a brief introduction for exchange traded funds for fixed income. Thanks, Aubrey.